4th of July 2022. This isn't financial advice. I'm located in Sydney, Australia, and we've just had our end of financial year, which is 30th of June. So I'm just reviewing my financial year figures. Actually had a bit of a negative year, just a little bit better than the NASDAQ, so minus 5%. But I don't want to use that as an excuse for me not making money. There was plenty of things I got wrong that I want to address. I did a lot right in the last 6 months since I've been recording these videos. So the first note I've got is doing these videos, talking it out loud, is actually helping me and my process to pull things together. But from July to December last year was a different story. And I've broken that down into two sections. I'm going to analyze those sections differently. So from June 30 to October 5th, I had a shocker. I did minus 14% versus minus 2% for the NASDAQ. October to November was better. It was 18% versus 13% on the NASDAQ. And from November 12th, which was fairly close to the peak, I did minus 12 versus minus 30 for the NASDAQ. So those last two periods were getting better. Still plenty of room for improvement, but definitely getting better. But yeah, where I did the serious damage was that July to October 5th period. October 5th is when we had a new sort of 50-day, the percentage of stocks trading above the 50-day went back above 20% after a sell-off. There was heaps of setups. I did a lot right, having options, having the right stocks. But before then, that sort of, that few month period from July to October 5th, I basically dropped the ball in a big way. So I'm going to go through those individual stocks and the observations that I've got, that I've made from that, and try and make sure I've built that into my business plan. So the first thing I'm going to note is on June 30th, I just had way too many positions open. I had Fastly, Pinterest, Roku, a little Australian company called Ignite, DocuSign, Crocs, Cloudflare, C, TDoc. Then I had options on AMD, Crocs, Docu, WWE, and XPEV. So immediately I just had too many trades on the go. I don't honestly know why I had so many going on, but yeah, there you go. So okay, so that's the first thing. Now, before I jump into the actual trades and what went wrong, I'm going to address the error of omission. Those names I just read out to you were all apart from WWE, but maybe they're all sort of in the same sort of tech space. And I was clearly just holding on to yesterday's leaders. They all started breaking down in February, March 2021, and I didn't really address that and start looking for the new sectors, which were things like oil and gas and shipping, for example. So first major mistake there, not being broad-minded enough and still sticking to what was working. I wasn't really using MarketSmith then, so I'm finding now just scanning by best industry groups is really just helping me identify what the best industry groups are. So that's sort of helped me with oil and gas this year, which I've talked about in plenty of previous videos. The other stock I didn't have was Tesla. So this is the king. I should have been all over this. So from that July-October period here, offered plenty of setups to get in, plenty of pullback buys, especially through here, and another one here. Why I wasn't buying it, I don't know. And I really don't know. Sort of such a big name, but controversial. I'm not sure if I was sort of just letting it all get to my head. There's people saying it's wildly overvalued and undervalued, and Elon Musk is amazing, Elon Musk is a fraud, and I don't know. I should have really just let the charts do the talking there. So yeah, the error of omission is not being in the right sectors, but then also not being in the sort of supreme leader for this bull market cycle. Okay, next is I just held too many stocks that were actually already in stage 4, and sort of hoping for the best. So let's go to FSLY. Yeah, what a pick of a stock. If we just go to the weekly, actually made good money on the way up here. Sort of clearly going into stage 3 here, getting very wide and loose, some huge gap downs. There's huge just red signals there that something's not right, even though the narrative was incredible. The stock itself was telling me something very different. I sort of I fell into a trap. This is the other sort of key point. I started a style drift coming out here, thinking, okay, well, I want to take out my cost base but try and hold these stocks forever, and hopefully end up with the next Amazon. And that is way easier said than done, at least for me. And I was sort of clinging on to that idea until I came to my senses in that sort of July-October period, and just dumped the remaining shares that I had. And there's a handful of these which we'll go through. So whether that's a mistake or not, I don't know. But for my personality, well, sorry, by that I mean maybe this thing turns around, it does, goes up 100x. We don't know, but it certainly doesn't suit my personality. The stress of this is not even sure it's actually worth it to see if you get a good result at the end. Now, some people argue against that. That's very much a personality thing. I think for me, keeping it simple is such a better way to go, and using stage analysis, which we'll come to in a tick. Anyway, FSLY, let's go back to the daily. Sold it in August. Yeah, so I finally came to my senses here. Should have been selling it back here when it was going into undercutting the 200-day, not reclaiming it. This is this period here where growth stocks had just had enough. They were just getting sold off heavily. I should have just started coming to my senses. Right, this is not looking good. Just get out. As stocks going into stage 4, or even, to tell you the truth, you can see like the end of the stage 3 here. Just jump out. So yeah, cost myself money there just by holding on too long. Next one, hang on. Along similar lines, Pinterest. Again, narrative was great. Blah blah blah. I sold few different chunks, July, August. Yeah, through here. Yeah, big gap down on earnings here. At least I think I was a bit earlier selling here. But again, look at the chart. Huge run coming out of COVID, getting very sloppy here, much like FSLY. So very obviously stage 3, last gasp sort of a move here, which I've discussed on previous videos, and I'll come back to it in a second. But yeah, trying to think, okay, right, maybe this is going back to stage 1, trying to push out to a new stage 2, and just doesn't had enough, and had one more go here, and that's definitely last gasp, and it's gone. So a number of times it's tried to do that and just rolled over. So another key point is to stand back, look at the bigger picture. I probably should spend more time looking at the weekly charts, thinking, hang on, this thing's had a huge run, it's had a huge valuation expansion, and it's now getting loose. Now, despite what I'm looking at on a daily chart, or what I'm thinking of that bigger picture, this thing is probably had its run. Next one, Pinterest was one of those ones I sort of just made a lot of money and took my cost base out, and was just trying to hold on for longer term. Similar to Roku, made a lot of money on this. When did I sell that? Where did I sell that? Roku. I did hedge one of the earnings things there by buying puts. That actually worked out okay. let's keep this similar. Sold the rest 5th of August. Yeah, around about here. That was a much better exit. Much better exit. So sort of double top formation here. I remember sort of back in this period, I was just basically just having enough of just taking a beating on the portfolio, and started coming to a senses that I've got to stick to stage analysis. People might think it's the next, whatever it's going to be, it's going to go to the moon. Reality is, had already gone to the moon, and it was coming back. So yeah, happier with that sell there. Next one in that cohort where I just held on too long was Teladoc. Go back to the weekly. Again, similar chart, good run out of COVID. Very obvious last scalp. I actually bought, sort of traded in and out, but bought the last one here. And then, where did I sell it? This one was terrible. Sold the last amount on 28th of July. Yeah, here. Waited far too long. Just broke basic rules. So again, if I said, right, we'll just sell a stock if it's going to stage 4, I would have been out around here somewhere. So I would have saved myself plenty of heartache and cash. Yeah, again, look at that. That's definitely just this last scale. I think it's a new stage 1. I think it's a new stage 2. But it turned out to be not the case, and the mistake was not so much the trade, but yeah, just not getting out quicker. Again, also just need to look at the big picture. This thing's gone from 60 something bucks to 290 in very quickly. You see the price action here. This is a logarithmic thing, so it's definitely showing the same percentage moves, and it's just getting sloppier and looser. And I should have been more alert that this, there's sort of so much euphoria around this area. Just should have been able to just sit back, look at the big picture, saying, "Wow, there's so much euphoria going on here." And then when those growth stocks just stopped responding and started going down, even on good news, I really should have been getting the hell out a whole lot quicker. So I analysed those stocks there that I just mentioned. I held those at June 30. If I hadn't been in those, that would have saved me 11% of the 14% loss. So the majority of it was just holding on to those sort of those previous winners just too long. So yeah, definitely a key mistake there. Okay. Need to do a better job at offensive selling. Some of the times it's just on the back foot too much. I haven't written down sort of key examples there. But yeah, just need to do a better job at offensive selling. Righto, the next one is yeah, a really big one was, in fact, I actually addressed this year in the videos that I've done about just focusing on those pullback buys. And now, after going through the trades in this July-October period, it really sort of stood out just how bad I was. I was just buying those stocks that were breaking out, and then they fail, you get stopped out, and just kept on doing that. If I just, even at the expense of missing the occasional huge winner, like in a firm, just waited for pullbacks or some sort of consolidation rather than breakouts, I'd be so much better off. And it was quite startling just to see how much chopping I was doing. Just buying breakout stocks, failing, buying breakout stocks, failing. So I'm going to go through some of those individual trades now. Sorry, the computer's freezing. What's going on? let me go through some of the trades I did. So Peloton, okay, bought it 13th of July. That was actually more of a pullback buy, so it's come up pulling back to the 200. Noted here, it wasn't actually this is such a bad trade, other than, again, just stand back and look at the bigger picture. This is a stock that is an iPad on wheels. It's gone from 25 to 180, and I'm still sort of trying to trade it, thinking there might be upside there. Now, it's not to say that wouldn't be, of course, but I was still focused on this techie sort of sector when there's other sectors that were actually had come out of better bases that were sort of starting to move along. So my biggest thing here, I probably shouldn't have been bothering with this this stock at all. But like I say, I'm actually not too unhappy with that trade. Okay, what have we got next? Airbnb. So there's a lot of trades here. Docu. Okay, C Limited. Bought C 23rd of July. Yeah, here. I mean, that's just stupid. Just because it sort of pushed out a new high. And so, again, something I've really learnt this year is stocks had a few good days. It's probably more likely to have a pullback or some consolidation. So there's no huge volume there anyway. There's all sorts of stupid in this trade. And of course, I get stopped out here. Whereas in fact, I should have been buying the pullback here. Sort of tag the 50-day, nice upside reversal day. Plenty of people, looks like they got shaken up. Looks like a lot of people like me who have been buying it here got shaken out, and then away it goes. So there's so many examples where I've done the exact opposite of what I really should have been doing. So again, I've talked about this a lot in the videos this year, is really focusing on those sort of vomit areas that people are throwing the stock out. That's usually seems to me like a much better entry point. So I mean, yeah, look at that. That's just stupid. Let me go through what's another one. All right. Where's Upstart? Okay, I totally got this one wrong too. Upstart. I don't know how I managed to lose money on this, but so I bought it 27th of September. Yeah, and what was I? I mean, it's just totally moronic. I don't even know what I was thinking there. It's had such a big run, stretch from the 50-day moving average. Can't see any reason to be buying it. So of course I get sold, stopped out on the first, bang, here. And then we had a new setup overall in the market on the 5th of October. So this is the time to be buying it if I was going to buy it, not selling it. So, I could have been taking partials there, and that looks like earnings here, so I might have just been out altogether. Even if I lost, it would have been sort of probably break even on the trade. But to buy it here was just totally stupid. A firm. So I think I had like a case of FOMO a lot of the time through here. I was really just coming unstuck. Firm 27th, same date. again, like it sort of had this BGU thing here, consolidation. I'm sort of just buying it just because it's sort of breaking out there. Yeah, it just doesn't work for me. And got stopped out 2 days later. Yeah, down here. Again, if anything, I should have been looking to buy here. I was sort of holding that 21-day moving average just nicely. You know, if I was going to trade it at all. So yeah, I say completely upside down what I've done there. On a better note, Simo, when did I buy that? 24th of the 8th. Yeah, here, BGU pulls back. Actually, pretty happy with that. Bought options on that. The options weren't too expensive. Volatility was actually a bit less back then. Now, even though sort of, well, this is one of those ones sort of bought it and didn't do much, just because of their options. And finally came good. Actually made a lot of money there. Could have also been buying it maybe again down through here. The semis were super strong at that point. Not a bad trade though overall. And one more, we'll be on buying breakouts. It doesn't work with Apple. Bought 16th of August. Yeah, again, look, sort of VCP sort of consolidation thing, and then buying it just because it breaks out. So of course it gets stopped out. I say it just doesn't work for me, this style. Might have still got stopped out if I bought something like here, but you know that's fine. Could have also been buying it here. I've had that sort of really pretty serious shakeout, like maybe this upside reversal day, or here, and just sort of enjoyed that big run there. But yeah, definitely buying these breakouts just doesn't seem to work for me. Okay, I could go on for longer with that, but that was a very big thing on buying breakout stocks, but I should have been buying pullback and just making no progress as a result. A key point is just being more decisive. So when I decide to get out, I should get out. I sort of touched on that in some of those previous stocks like Pinterest and Teladoc. I'll sell, things aren't going well, I'll sort of sell half. No, I should just get out and be true to my stop loss plan and trading plan. So yeah. An example where I did do some offensive selling really well. I bought AMD here, back here somewhere, I can't recall exactly, but yeah, sold the options here and rolled up to buy new ones here, so that was really good. So definitely part of the process. Okay, again, just stand back. What you think doesn't really matter. The reality is here, it just had a very fast run, so it's stretched from the moving averages. So more than likely, it's going to come back or at least consolidate. So there's not real harm, unless it's going to be the next 100 bag or 3 bag or something very quickly. Then just at least take some profits off the table. And yeah, so actually it's a good point, because what I've noticed is that my returns have been disturbingly similar to the market. Now, what I think that's come down to, some of the reason is I'm selling when everyone else is selling and buying when everyone else is buying. Now, to flip that on its head, if I'm buying a pullback, so I'm buying when people are selling, and if I'm forcing myself to sell when things are stretched like this, I'm selling when people are buying. So I think that's going to be quite good. In fact, it already has been, because I've been doing that the 6 months in those tiny trades this year. So yeah, huge point there. A bit more controversially, selling, and I've talked about this in the last 6 months, so it's good that this has sort of also come up again, is see AMD here undercut the 50. Now a lot of people would have been selling here, and I just need to be very careful about that. This is a super strong sector. We had a new buy signal 5th of October on the NASDAQ. So I think it's actually okay to be buying under the 50 as long as A, the market's strong, it's not weak and blah, 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 the market's strong, and also you're dealing in the strongest of the strong stocks. I don't know if there's some sort of magical force that just because it's below the 50 that it's doomed, and you could say only confirm once it goes above it. I just don't know. I don't really think so in some cases. So again, just so right, strong. Simplistically, this is a super strong stock. You see it's coming out of the base there, stage 2 pullback. Buying it before all the other traders sort of are piling into it. And you'll know soon enough you'll get stopped out anyway if it doesn't work out. And a classic was Cloudflare, and I made a lot of money on this one in that October-November period, which I'm going to address a bit more specifically in that video. But coming out, first tag of the 50 fails it. Everyone's thinking, oh, shit, it's done. And then you get a new signal, market signal here on the 5th of October. Now, I've discussed this. I don't necessarily want to be buying just because the stock has gone above the 50, but I guess you have to take everything into context that, strong market, strong sector, can you afford just to sort of take the punt? Whereas this year, things have been so much more fragile. You don't necessarily want to be chasing a stock after it's had a good day. I mean, that stock was up, 8% for the day. This is a tough one. This did shake out a lot of people. I actually think I had the options here, and so I didn't actually bother doing anything with it here. And, it's one of those times that sort of worked out my focus, and it just went on this meteoric run up to here and made a sort of huge amount of money. So, again, I think the point is, I don't think it's the worst thing to be buying under the 50 if everything's lining up. Or be prepared to jump on it quickly if everything's lining up. So, okay, what else? Just the fear of missing out. Looks like some of those trades I was just getting desperate, to tell you the truth, and other people are making money and you're not, and you wake up in the morning and the stock's up by X and you're right, I'm going to jump on it, let's go. And so often it's the wrong thing to do. Okay, so I'm just going to re-summarize this, and just talking this to myself and make sure I put on a plan. Don't have too many trades on, so I think for me that number's probably between 5 to 8. I had more than that. I had sort of too many things going on. Just stand back, look at the big picture. Is a stock might be looking okay on the daily, but on the big picture, on the weekly, are you just playing in a stage 3 stock and sort of just hoping for the best? Be open to new sectors. I was still clearly just hanging on for the glory days of tech from 2020. So run your scans on different industries, see where the next leadership is coming from, coming out of a nice long base, that the valuations haven't expanded too much. Next one is stage analysis is seriously awesome. That Stan Weinstein book is so on the money. It's simple to understand and interpret. And honestly, if I just stick to stage 2 stocks, early stage 2 stocks, when the market is healthy, I just think it's just going to make me good money and save me a lot of heartache. Now I've incorporated that with those individual learnings, like I say, could be maybe buying stock just a bit under the 50, and there's like little sort of nuances there. But the stage analysis is at stage 1, 2, 3, or 4 is probably where 80% of the money is made. Again, just stand back and look at the big picture. Is there exuberance? Is there pessimism? What evaluations have been doing? So that's why I started doing separate videos on big picture, and because if a stock's already expanded in valuation, multiple times, yes, it might have a lot more to go, but equally, you just need to just take it all into context that, well, I might have just had a good run, at least be taking profits and getting ready that this thing could reverse. yeah, do more offensive selling. So yeah, selling into strength. Like I went through that example with AMD. Everyone's getting a bit cocky. Yeah, what's the saying when the quacks are ducking, feed them. Don't be afraid to sell some into them. Don't have FOMO that you might be missing out. Next point, very major. If I just stick to the majority of the time pullback buys, it's going to be much better for me. That's a very huge point for me. Next is be more decisive. So when I decide to get out, just get out. Okay, next. Yeah, and the last one is those areas of omission. I sort of touched on that. Why wasn't I in those better sectors? And yeah, why wasn't I in Tesla? So I really need to, I guess, just be more open-minded. So, well, what stock could be the next big one? Or if the stock sort of has a lot of noise around it, like a Tesla, try and put that to one side. And if the chart says buy, just buy it. This video has been a bit long, but it was super helpful to go through those individual trades. I got a lot out of it. It's actually reinforced a lot of the things that I've identified this year where my problems are, like pullback buys. So yeah, whilst it's annoying just to not have a good period, forcing myself to go through those trades was humbling but extremely revealing at the same time.